Chartered and CNBC-TV18 present India on the Move, Season 4.
Hello and welcome to Season 4 of India on the Move, our special conversation series where thought leaders spot trends, exchange ideas and insights on things that could shape our future. Today, our focus is on the retail banking segment, a segment that has, of course, seen tremendous change, particularly through the last 6 months of this global pandemic that we're in, and a segment that has also embraced change very, very quickly and is harnessing emerging technologies to step into the future. To discuss the big trends, the challenges, the opportunities in retail banking, I'm joined by a panel of industry leaders today. Let me welcome them. Rajesh Kumar, MD and CEO of TransUnion Civil, T.R. Ramachandran, Group Country Manager at Visa, and Kushal Roy, Head of Retail Banking at Standard Chartered. Welcome, gentlemen. Thanks very much for joining us here today. Kushal, if I may begin the conversation with you, it has been a tough period for businesses, a very tough period for the banking and financial institution space as well. There were multiple business continuity challenges at the onset of the pandemic a couple of months back, right from keeping distribution channels open to maintaining social distancing norms. Add to that compliance functions that were not really designed for remote working. Give us a sense of what your business continuity plan entailed, and 6 months into this pandemic, what are the new challenges that you're navigating today?
Thank you, Mridu. As you rightly said, it's been a multifold challenge with many dimensions. So obviously we had to look after branches, we had to look after our employees, look after our customers as well, and make sure that in the process, the linkages don't break, right? So happy to tell you that we kept all our branches open throughout as per the government's mandate and as per RBI's mandate. Our employees have been fully up to the challenge. We had to devise new ways of working overnight. So we enabled a large proportion of our employees on work from home very quickly overnight, which included some of our back-end staff, our call center staff, our customer service staff. So all of them were enabled on their particular roles so that they could work from home and deliver the right level of service to the customer. Digitization and the whole digital game, that was something which came in really handy. Now, while that's a way of life for us for quite some time, in this particular scenario, it has been very helpful, both in terms of maintaining contact with customers as well as organizing our internal ways of working, meetings, and so on and so forth.
Let me also bring in Rajesh. On the loan side, before COVID-19, Rajesh, consumption-based lending was high, impulse buying was on a high. The number of people applying for loans on a monthly basis was growing at almost 30% or more. What does the runway for growth look like at this point in time? And what's the nature of growth that you're expecting now?
Mridu, so I think first thing is that 2018 was the boom year for all kinds of consumption loans, consumer durable loans, and these very small ticket, short-term, high-velocity loans. And then in 2019, I'm just going back for a minute to set the relativity here. In 2019, while the absolute numbers were still high, the percentages were lower thanks to the base effect of 2018. Come to 2020, obviously, during the lockdown, our inquiry volumes were down to almost 10 to 15% of the pre-COVID volumes. And then once the lockdown lifted from June onwards, by now we are back to about 65 to 70% of the pre-COVID volumes. And as you mentioned, yeah, there has been a sure change in the product mix that was expected. I think the product mix in terms of the risk appetite of the lenders is different. So if I were to for a minute look at this equation from the supply side, from the lender's side, and then the demand from the consumer side, obviously there is a shift to more need-based products. So again, you can see after the opening up, consumer durable loans are taking off, two-wheeler loans are taking off, affordable housing, small car loans, but the traditional unsecured loans with the slightly larger ticket size are lower. Likewise, the fintechs-led small ticket personal loans are a little lower right now. And from the consumer side, you can clearly see it's all going to be more need-based. probably it will take some more time for consumers to be confident enough to go in for more discretionary spends and therefore more discretionary or luxury item related loans. So that's really the shift right now.
And Ram, on the credit card front, in the US, for the first time since 2011, revolving consumer debt that's largely made up of credit cards has actually fallen below $1 trillion in May 2020. And that's largely due to reduced spending, increased self-governance. One would have thought that, in these times of a global recession and high unemployment, people would rely more on credit cards, but that doesn't seem to be the story, at least in the US. What is the India scenario like at this point?
Thanks, Mridhu. Firstly, on the US side, I think it's interesting because a bunch of the economic impact payments and the enhanced unemployment benefits, which the government has given to the average US citizen, seems to have gone into sort of repaying some or paying down some credit card debt, right? And what we are seeing, interestingly, post the June sort of quarter, in this quarter, we are actually seeing some sectors like retail, home improvement, food and drug, pharmacies, etc., growing at about 20%. Travel continues to decline by about 70%. But overall, in terms of spends in more non-discretionary, medical, retail, food and groceries, what is going up? And like you rightly said, some of the debt is getting paid down, which is, I think, from a lender's perspective, good news, because I think leverage is not as high as what some of the provisions that banks there have taken. Coming to the India context, it's somewhat different. And as Kushal will no doubt tell you later, because of the impact of moratorium, the moratorium 1 and then the moratorium 2, I think dozens of cans have been kicked down the road. And how much of them are actually empty and how much of them are full, we will find out in September, October. But banks have been prudent, they've taken some provisions. And from where we sit, we've certainly seen revolve rate have not gone up significantly across banks. But the impact of delinquencies have been frozen somewhat, and that we'll come to know only in October. But like I said, we are seeing retail and non-discretionary spend, particularly on e-commerce, picking up post the July period.
Right. Okay. And, speaking of the moratorium, let me bring you in, Kushal. The loan moratorium window for borrowers ended on 31st August 2020. How are banks planning restructuring for retail loans in particular, particularly for those people who lost jobs or took very, very significant salary cuts in these tough times?
I think there's been a significant amount of engagement with customers over the last 3 or 4 months, both across the salaried as well as the self-employed segment. I would venture to say that the stress is mostly or largely in the self-employed segment rather than in salaried.
Right.
So, our people, and I know that all other banks in the industry have adopted a similar approach. We have had very close dialogue with customers in order to help them to manage their debt. So as you know, most banks have a dedicated debt management function, also referred to as collections. So there's been a series of ongoing discussions with customers, and I'm happy to tell you that most banks today feel that the issue is kind of resolving itself. As people come out of the moratorium, I think repayment capability has increased significantly over the last few months. We did see considerable stress in March, April, and to some extent in May. Onwards from May, I think the situation has definitely improved. And there is significant amount of light at the end of the tunnel as we move into September.
Standard Chartered and CNBC-TV18 present India on the Move, Season 4.
Kushal, every company really has to be a tech company today. Banks are no different in that sense. Give us a sense of how automation, chatbots, and other emerging technologies like artificial intelligence or blockchain have really helped you through the pandemic in particular, and have your collaborations with fintech players been particularly useful in these times?
Indeed. So like I was saying earlier, I think digital ways of working and digitization in general are fast becoming ways of life, right? Especially in the banking sector, because the benefits are many. When you apply digital approaches or digitized processes, you get benefits in unit cost, you get benefits in customer service, customer experience, you get in customers at a lower cost on your books. So the benefits are many, and most banks, including us, have been working very hard at it. What has happened in this whole COVID period is that the whole thing has got a big boost, right? So not only are our own employees seeing huge benefits in adopting such ways of working, but customers have suddenly woken up to the fact that digital is a no-contact approach. There is no COVID risk in applying digitally, in talking to your relationship manager digitally, in investing digitally. So overall, I think the ecosystem has become ripe for a big digital push, right? It is somewhat like the demonetization event of 2016. So similar kind of push is happening on the digital side. And it is something that I hope is going to stick. And hopefully that will allow us to push this new way of banking into the future.
Rajesh, like Kushal was saying, digital transformation of lenders has also been accelerated tremendously. Consumers at their end have been shifting to digital transactions in a big way. Yet there is often a trust deficit between the two. So when it comes to credit information companies like yours, how does this whole shift to digital impact your business? Does it somehow sort of transform and expand your role, perhaps?
Most certainly. I think so CIBIL has played a very important role in the ecosystem over the last 10, 15 years, Mridu, with our CIBIL score. And now when we are talking about digital transformation, it's all information for good, and our job is to make the trust possible that you were talking about. And when we look at our ecosystem today, I think we are extremely lucky to be in a country that's very futuristic in the way we are developing our ecosystem. You talk about the account aggregators, you talk about the data architecture that we're talking about. So all of this put together, and then a whole lot of public databases like telecom data, GST data that are soon going to be available. Now, one thing is clear. We have the traditional sources of data, and we have some of these new alternate sources of data. You call it alternate or you call it unstructured, whichever. There are going to be huge volumes of data, which obviously will need some curation. And it is companies like CIBIL who are going to take advantage of that. And not just that, Mridu. So a lot of this data will have noise on one hand, and on the other hand, to make trust possible, there have to be clear correlations. And a company like CIBIL, we are very, very well poised to do that, because we have decades of traditional data, and we have this new data as and when it's available to us. And we are investing in new technologies like machine learning and advanced analytics, because we also realize that as you go into these technologies, it is important to create explainable models, right? Because there is going to be some systemic bias, and there are going to be hidden patterns. So we are also focused on creating models which will be explainable and easy to understand in terms of the features, importance, etc. So clearly a huge opportunity, and we are looking for a bigger role here.
Bringing you in, Ram, two trends that I want your inputs on. Touchless commerce or contactless payments are gaining momentum in a big way, especially because of the nature of the pandemic we are in. Is that trend really here to stay? Or is this, do you think it will sort of taper down once the pandemic is over? There is also a consumer shift, especially in developed markets, from credit cards to debit cards. Again, is that a medium to long-term trend? And if yes, then how does that impact your innovation and your product offerings in the future?
Let me cover the contactless one first. And I think that is an irreversible trend. Over 55 countries globally actually increased their limit up to which you don't have to enter a PIN, or the contactless tap and go works. For example, in India, it's 2,000 rupees. And similarly, in many other markets, there is a limit. But 55 countries actually increased the limits. What the RBI did was said that even greater than 2,000 rupees, you could do a tap plus PIN transaction. Right? Today, there are more than 60 million contactless cards in the market. And so that trend, we're only seeing gaining momentum. At the end of the day, for digital commerce to grow, it has to be as easy, as intuitive as paying by cash. And if that trend happens, then we see that as an irreversible trend. And we're super excited to sort of grow that market further. Coming to the second part of your question, I don't think it's credit versus debit in India, although that is the trend in many of the sort of developed markets of customers subtly shifting towards debit cards. India, always the value of transactions has been 50-50, though if you see the number of cards, there are 970 million change debit cards, 51 million credit cards, but the volume always has been roughly 50-50 in terms of transactions. But today we're seeing plenty of interesting trends, right? The Reserve Bank of India just announced that debit cards can be issued to overdraft accounts. Visa is working with many partners to facilitate installments at point of sale using debit cards as authentication, standing instructions in debit cards, contextual commerce and debit. So there's a whole bunch of things happening.
Kushal, going forward, managing loan stress along with maintaining customer sensitivity is really, really going to be key for survival. So as a financial institution, how are you drawing that roadmap?
Look, I think the key question is how fast will the situation move towards normalcy, right? And we spoke about spends a little while ago. What I can tell you is that we are seeing spends coming back to about 80% of where it was in Jan and Feb in the month of August. And hopefully, as you rightly said, as the festive season comes up, spends will keep going up and will normalize in the near future. And that's a great indicator of where customers are. If they can afford to spend, they can afford to pay as well, right? And if they can afford to pay, they can afford to borrow. So the whole cycle should normalize, in my opinion, in a couple of quarters. And till then, I think there is a certain amount of caution required in borrowing, both on the customer's behalf, because they should not overborrow and create undue stress on their financials, as well as banks who should not get their customers over-leveraged. It is very important to analyze what led to the customer stress in the first place. Cash flows. It's a very important analysis that we should do as bankers at this time.
Rajesh, let me also come to you regarding credit score parameters. These are constantly changing as you have access to more data, access to better technology. So, in fact, you also recently launched a new scoring mechanism. Give us a sense of what's different about this one and how has the uptake been so far with banks and NBFCs?
Oh, yeah, Mridhu, the uptake has been near 100%. Almost all of our more than 4,800 active lenders have all adopted to the new credit vision score, as we call it, the CV score. As we have more and more data, we are constantly investing in trying to create new products that are stronger in terms of structural prediction of risk. And as more and more data is available, that's going to be the journey for us. It is going to be all about creating solutions that are easy to integrate for the lenders, because again, as we have more and more data available, continuing with the journey of the last few years, it is indeed going to be difficult for all these lenders to create their own IT architecture and digital frameworks. So our endeavor at CIBIL is to really create easy to integrate solutions and easy to use scores, just like how the CV score was.
Ram, the pandemic has in fact seen a surge of cyber warfare, cyber attacks over the last couple of months. Financial institutions, of course, always a favorite amongst cyber criminals. Phishing and malware attacks are becoming more and more frequent, more and more sophisticated. So give us a sense of, what are the big security lessons or trends that you are picking up from the pandemic? Are you rethinking your cybersecurity strategies as well as your investments as we step into what we are calling the new normal?
I'll tell you, we are seeing three kinds of distinct trends, right? One is fraud is shifting online. Before the pandemic, payments frauds are migrating to e-commerce, and that trend is sort of accelerating in a very big way, particularly with fake messages purporting to come from either seller sites or bank sites or whatever it is. With the uptick in e-commerce, and like you said, phishing is the most important or the most prevalent and widely used sort of tool by fraudsters. For example, the last one I saw was the lure of fake COVID test kits online. And you sort of click on that and a malware downloads on your thing. The important thing for all of us to take is that, like I mentioned earlier, India is taking baby steps towards digital, right? And taking it very hesitantly. It was towards demonetization earlier, and the pandemic is sort of making people graduate to that trend. But we all need to be very, very, cognizant of the fact that it should not be one step forward and two steps back, because of all the things that we are seeing in terms of sort of trends. And new sellers and new buyers are both very, very vulnerable. And we are working very, very closely with the central bank, with the FIU, and with the banking clients that Visa has to make sure that prevention is better than cure in this case.
Kushal, finally, what are the big tectonic shifts that technology and consumer behavior will really help you drive your products and services for? And mobile and digital have, of course, already caused huge shifts. But as we peep into the future, what will the bank of the future look like? How will technology impact ATM operations, bank branch operations, and contact centers as well?
I think you will see a shift towards what I refer to as the phygital bank, right? Frankly, digital and physical are not at odds with each other. I feel they will coexist in the form of a phygital bank, part physical, part digital. There are benefits to both approaches, especially in a country where India, with our kind of demographics. And my sense is they will continue to coexist in that phygital form for quite some time.
Right. Okay. So as we wrap up, I want a quick comment under 30 seconds each from each one of you on the one big shift that you're gearing up for in the post-COVID-19 era, a big shift that you think is going to drive your business into the future. Maybe Rajesh, we can begin with you.
I think one big shift for our business at CIBIL will be the democratized access to data and much faster technology to create good pinpoint solutions. And to drive financial inclusion for a country like India with a bigger bottom of the pyramid.
All right. Ram, what about you? The big shift you are gearing up for?
Actually, I'd say, Mridu, there are two big shifts. One is open banking and account aggregators and the implication of that on the entire ecosystem. And the other is as tier 3 and tier 4 customers adopt digital payments, what are the kind of infrastructure and security and paraphernalia that we have to put in place to gather to that sort of momentum? So those would be two big things that we're gearing up for.
All right. Kushal, what about you?
No, I just hope like hell that the digital adoption that we're seeing sticks and that becomes the norm in future.
Absolutely. Well, thank you, gentlemen, for joining us here today and sharing those very, very valuable insights into what the future of retail banking might look like. Appreciate you joining us here today. Until next time, it's a wrap on India on the Move. Thanks for joining us. Goodbye.
Standard Chartered and CNBC-TV18 present India on the Move, Season 4. Focus, ideate, innovate, enable.